Right now, my portfolio is down, not up, down. After 3 weeks of buying every single week with real money, I'm sitting at a small loss. And I'm going to show you every number, every buy, and exactly why I'm not changing a thing. Welcome to Highwater Weekly. This is where I show you a real money portfolio every week, no filter. If you're new here, the strategy is simple. I buy great companies only when they are beaten down and on sale, a little at a time, and I hold them for the long run. No day trading, no hype, just a patient system. Run out in the open where you get to watch it work or watch it hurt. Today we are covering three things: where the portfolio actually stands, every buy I made this week and why, and then a lesson because Warren Buffett just did his first big interview since stepping down as CEO, and what he said lines up almost perfectly with what this channel is about. Let's open the books. So here's the top line. I've put in $670 of real money so far, total. That's it. And I want to be upfront about how small that is because I think it matters. I'm not a fund manager. I'm not sitting on a 7-figure account telling you what to do. I'm building this the same way most people actually have to build it, a little at a time, out of income, while everything else in life still needs paying for. If a few $100s is where you're starting, then this channel is built for you because that is exactly where I'm starting too. Now the split, $520 of that is in Meta, $150 is in SpaceX. And those two positions could not be behaving more differently, which is honestly the most useful thing about this whole portfolio right now. Let's start with Meta because it's the core. This is the position that actually follows the method. 10 separate buys so far. My average cost is $636.66. My cheapest buy came in at $585. My most expensive was at $672. And Meta is trading right around $651 as I put this together. So the position is up, barely. Call it 2%. 2% after 3 weeks. I want to sit on that for a second because this is where most channels would either ignore it or spin it. 2% is nothing. It's noise. It is not proof that I'm right. And if it were negative 2%, it wouldn't be proof that I'm wrong either. Meta's all-time high is $796. From where it's trading now, it needs to climb about 22% back there. That's the actual finish line. Everything in between here and there is just weather. And that's the part that's genuinely hard about this strategy. Not the buying, the waiting. 3 weeks in, you've got basically nothing to show for it. And the whole thing only works if you're willing to be bored for a very long time. Now let's talk about the other position, SpaceX. And this one I need to be completely honest about because it's the one that's bleeding. If you watched before, you know the deal. SpaceX is not a high water method pick. It breaks my own rules. It's a brand new IPO that came public at a rich valuation. It was never a beaten down bargain. I bought it because I personally wanted to own a piece of SpaceX. And I told you from day one, it was a small, high risk side bet with money I'm okay losing. Well, it's losing. My average cost is $148.95. It's trading around $123. That position is down roughly 17%. In real dollars, that's about $25 gone. Not life-changing money, which is exactly why it stayed small, but a real loss on real money. And you're seeing it the same week I am. And here's the confession part, because I think this is more useful than pretending I have perfect discipline. My plan was to leave SpaceX alone. I told myself I wasn't going to add unless it dropped a lot further. And I kept buying a little. $20 here, $10 there. Not because I had some brilliant thesis update, just because it was cheaper than last time and it felt like an opportunity. That's not strategy, that's instinct. And instinct is exactly what this method is supposed to protect me from. Now, here's the interesting twist, and this is the actual lesson buried in my own mistake. Look at what those small buys did to the position. My average cost on SpaceX started at $157. After buying at 122 and 123, my average dropped to 149. It fell $8 a share without me predicting anything. That's dollar cost averaging doing its job. When a stock falls and you keep buying the same small amount, every purchase drags your average down and buys you more shares for the same money. It's the mechanical version of buy low, no forecasting required, no bottom calling, just arithmetic. So the math worked, but I want to be careful here because there are two very different things going on and it would be easy to confuse them. Dollar cost averaging into a great company that's temporarily out of favor, that's the method. That's meta. Dollar cost averaging into something because the number is going down and it feels cheap, that's not the method. That's averaging down on a falling knife. And it's how people quietly turn a small speculative loss into a large one. The average cost dropping feels like progress. It isn't if the business doesn't deserve the money. Am I worried? No, because the position is tiny and I sized it knowing it could go to zero. But I'm flagging it out loud so you can see the difference. And so I can hold myself to it. Going forward, SpaceX stays capped. It's a side bet, not a project. Now the lesson for this week. And it ties into all of this. Warren Buffett sat down for his first major interview since handing over the CEO role at Berkshire. He's 95 years old. He has nothing left to prove and no reason to say anything he doesn't mean. And one of the clearest things to come out of the conversation was this idea. Everybody wants quick money, and that's the problem. He talked about how overheated things have gotten and about the rise of speculation, people treating the market like a casino instead of buying pieces of businesses. Now think about what that means coming from him specifically. This is the most successful investor in history. He did not get there by catching the hottest new listing at the top. He got there by buying good businesses at sensible prices and then doing the single hardest thing in all of investing, nothing, for decades. And here's what gets me. Everybody quotes Buffett. Almost nobody actually does what he does because his real advice is boring. Buy quality. Don't overpay. Hold for years. Ignore the noise. There's no adrenaline in that. There's no clip. There's just money eventually. I bring it up because I'm leaving both sides of the lesson in one small account this week. Meta, a great business I bought when the market was scared about its AI spending, is quietly green. SpaceX, an exciting story I bought at an exciting price, is down 17%. That's not bad luck. That's the difference between buying a business and buying a story. And it showed up in a $600 portfolio in 3 weeks. So what's next? Nothing changes. I keep buying Meta while it's below its all-time high every week, small amounts, regardless of what the price did that day. When it finally prints a new all-time high, I stop buying it. I don't sell it. I stop adding, and I let it compound while I go find the next great company that's fallen on sale. SpaceX stays small and stays separate. I'm not selling it over a 17% drop. I went in knowing it was a gamble, but it doesn't get promoted to a real position just because it's cheaper than it was. And I'll be right back here with the same numbers updated, whether they are green or red. Quick reminder before I go, nothing in this video is financial advice. I'm not telling you to buy anything. I'm showing you what I do with my own money, including the parts I get wrong, so you can judge the results for yourself. Please do your own research. If you want to follow a real money portfolio built the slow way, the boring way, subscribe, and I'll see you on the next video. This is Highwater. Buy the dip, hold for the high.